All right, here's how to sound smart when it comes to mortgage rates. So, inflation reports came out last week and they actually looked pretty good. But for some reason, mortgage rates started to go up, and that's what's got folks confused. And it's because while most of the attention has been on inflation and jobs and tariffs the last few months, investors are starting to show interest in another topic, the national debt. So, here's what's happening. When inflation cools off, like it has been showing signs that it is, the Fed typically lowers rates in response. And that's helpful, especially for the government, because lower rates reduce the interest payments on our national debt. That's why you'll sometimes hear President Trump pushing the Fed for rate cuts, or at least that's one of the reasons. But lately, investors are starting to show that they're losing confidence in the country's ability to manage our debt. They're starting to pull their money out of US Treasuries, and when that happens, that causes yield or prices of US Treasuries to go up. And since mortgage rates track closely with those US Treasury bonds, that means mortgage rates are going up. So yeah, it's complicated. And with all these moving parts, it's really hard to predict what's going to happen in the future with mortgage rates. But here's what we do know. People move because of life events, not because of mortgage rates. So sure, when rates were 3% in that unicorn market, people were buying homes who otherwise wouldn't. But today in this 6 to 7% range, that's normal. And that's where the average has been for decades. And people are still going to buy, they're still going to sell, and they're still going to refinance when rates are in this range. And yes, we'll probably see rates dip below 6% at some point in the future. And when we do, it'll be a great opportunity for everybody to refinance. But for now, here's the takeaway. If you're an agent, stay consistent. Life events still drive the decision to buy or sell a home. And buyers and sellers need clear guidance, not headlines that make them panic. If you're a home buyer, focus on your specific situation and not the headlines. If the payment fits your budget and you love the home, then move forward. Real estate over time has always shown that it's a successful investment, even when it fluctuates year over year. And I wouldn't recommend buying a home with the expectation that you're going to refinance in the future, but you do always have that to your advantage. All right, so there you go. Hopefully that made sense. If you need any help understanding what your numbers would look like in this specific market, feel free to give us a call or visit our website at novumhomeloans.com. Thanks.